are the ones to watch, not tech. I mean, there's like this watching the Magnificent Seven doesn't get me.
But is anything if it takes rates falling to turn them around? Aren't we going to be sitting here for quite a while, waiting?
Well, we're here. Yeah, that's my point. My point is, I'm not positive.
Well, by a while, we're talking, what, 6 months? That's when the market's counting on the first cut.
I have to. No, I think that you'll see the Treasury issuance and bonds have to go. You know, you need a guy like, let's say, a guy who won a big game this week. You need a guy like David Tepper to step up and say, you know, bonds are at an attractive level, maybe 5 3/4. Until you get the Teppers of the world, real smart guys, not guys who chatter on Twitter, but guys who just say, okay, this is
So Ackman covering a short is not enough.
That was one of the great, you know, I'm doing what I'm doing, but don't take my cue. Stories. You know, David, I think that when the billionaires play, go away.
Good morning, everyone.
I agree with you on that.
You do?
Yeah.
Hope everyone had a very
Just
good
'cause they're
weekend.
billionaires doesn't mean they actually know anything about anything.
Thank you. Billionaires.
My experience has been no one knows anything.
They're just, you know,
That's what I have come up with after all these years.
they're dominoes.
No one knows anything.
Well, no, there's some who do.
No, there
I think that guy Tepper's pretty good.
There's like 3 people who know
You don't
something.
think Tepper knows
Literally
something?
3 people.
You don't think Tepper knows something?
I think he knows something, but doesn't mean he's not going to be wrong.
No, but I think he knows that this is not the great level to get involved. You need to see something. You need to see the Fed give. You know, we're going to have Treasury
If
issuance
really you're going to be sitting here till the Fed gives, then what are we going to do? What are we going to do every morning?
What's up? What's up? How is it going? Pretty good, man. Pretty good. Can't complain. Nice start to the week.
So why won't there be any
Definitely seeing the market having a nice bounce this week, which we're already in positive territory today. So let's see if the market can hold these gains.
To this new video chat and buy an apple and do an appointment ahead of time. You just walked in the store. And while everyone else is
Yes, I am.
you can go right out.
Are you of the view, Morgan Stanley's Mike Wilson?
I caught along yesterday at the open. So on
I read
on ES, I caught a nice long at the open. At the 6 p.m. open yesterday because I saw that over the weekend, well, at least earlier Sunday, around 2 or 3, that the market was going to gap up, which it did. So I'm looking for a nice pullback to long, but I really would rather see maybe a full pullback to fill this gap. We do have a gap that has to be filled. So I'm going to be very cautious in my entries and have a pretty relatively tight stop. The gap to the downside. Yes, there's a gap. So on Friday, ES closed at 41.3622. And yesterday it opened up at 41.46, pulled back to 41.43, and then it's just been upward since then. So I want to see a decent pullback. We might get a nice bounce off of 41.50. If it can't hold 41.50, we'll end up coming to fill this gap. And ideally, once that happens, I'll be looking for either a double bottom at 41.22, or I'll be looking for it to create a higher low, which then I can use the 41.22 as my overall stop loss, and then just look to add to the position. So not very eager right now to get ahead of it, because I did catch some of this run up last night. But the market is definitely super oversold, and we're definitely going to be seeing a rally. And also be mindful that we also have a gap to fill to the upside at 42.10. All right, so 42.10, which you can see right here on my 1 hour time frame, we also have a gap. So right now we have 2 gaps, one to the up, one to the downside. So it's going to be which one does it wants to fill first, right? Mm, mm, mm. Again. Mm, mm. Mhm. Shit. What is this? Um, okay. Give me a few guys. I'm just setting up something right now. Okay. Trash, trash, trash. Okay. Um. Yes. Instead of bounce. We don't trade 10-year yield. How was the trip? The trip was good. The trip was good. Give me a sec. Okay. Definitely couldn't wait to come back. But it was good. It was nice disconnecting and stuff like that. Oh, good stuff, good stuff. Okay. Mm. Give me a second, guys. I'm just setting up my charts real quick. Okay, Z. 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 G. Okay, so NGZ. Okay, NGZ. Do-do-do-do-do-do-do. See. BLZ. Okay, 20 days. Minutes. Yes. Okay. One, two, three, 5, 6.
It's almost as if famous one step ahead of the policy constantly. Watch your coverage. It's very
All right, 5 minutes to go. How was the trip? It was good. Hey, what's up? What's up? Weekend was good, man. Weekend was good. Went out to Connecticut to visit family. Came back Sunday. It was good. It was chill. I had a crazy ass arm workout on Saturday. Yesterday, pretty much just relaxed and waited for the 6 p.m. open. Caught a quick trade on ES, and now we're here today. How about you guys? How was your weekend? Jordan Queen, what's up?
Is there anything you can fill us in there yet?
the early estimate is
Bro,
that
right
the
now, like
all-in cost, and that's
my
the one
arms
that
feeling
everybody
like I'm
knows.
like a T-Rex. Like
Prior
it's so
to
hard to
this
like
contract,
extend
the
my
previous
arms.
contract, it
It's
was
been a while because I felt a really good
$60 per
soreness
hour all
in my
in
biceps and
for
forearms.
the big three. 55 per hour all in for the foreign automakers here in the U.S. and $45 per hour for Tesla. The early estimate on the Ford contract that we've seen is that it comes in somewhere about $88, $89 per hour. We haven't seen a final calculation. But if that's correct, let's say it's $87 to $89 an hour, basically a jump of $22 an hour all in per employee. Look at that gap between them, the big three, and the foreign automakers. They're at 88, 89. Foreign automakers are at 55. Now those wages are going to go up as well. Are they going to go up as much as they did at the UEW? That is going to be the big focus now over the next several years. The gap between what Detroit is paying and what the foreign automakers are paying here in the U.S.
Phil, this comes at an interesting time as well because, the last weeks, and I want your, obviously, input here, we continue to hear that EVs are starting to really slow, that demand is really slowing. We talk so often about what this is going to mean for GM and Ford and their plans in terms of being profitable in EV. Meanwhile, they seem to be pushing things out. Kind of just give us a sense as to the landscape as we sit here right now with this tentative deal.
The overall demand is slow. That is an actual thing that is happening within the auto industry. Doesn't mean that we're seeing a reversal and people are not buying EVs at all. It's just not growing as quickly as it was in the past. It's about 7% of overall sales. And for the big three, they have to sit here and say, do we commit as much as we expected through 25, 26, or are we a little more judicious and realize that the market will be slower to develop? And maybe we push some of these plants that we were planning to bring online in 25 and 26 out to 27 and 28.
I know, right?
And most would argue that's a smart move. Now, at the end of the day, David, what has to happen
if they are going to be competitive in EVs, they got to get their act together, because they certainly haven't been right off the ball. You know, yes, they're doing better and they're increasing their sales, but this is still Tesla's game, and they're nowhere close, and that has to change over the next several years, and they know that. You listened to the Ford call the other day, Jim. I know you listened to it.
Yeah.
It's pretty clear. They know what they have to do when it comes to EVs, and Ford's got other issues in terms of warranty costs. But with regard to electric vehicles, it's showtime. You've got to come to the plate over the next couple of years. Otherwise,
All right,
you can
so
pretty
we
much
got
say,
about
okay,
30 seconds.
we'll be talking about this
Let's
again
see
here in
what
the
we
next
gonna
week.
get. Looks like this market's gonna pop right out the gate.
Phil, going forward from here, let's listen quickly to what Sean Fain said about the next labor negotiation cycle. Take a listen.
One of our biggest goals coming out of this historic contract victory is to
7,
organize like
5,
we've never organized before.
4, 3,
When we return to
2,
the bargaining table in
1.
2028, it won't just be with the
Ding,
big
ding,
three,
ding. Let's go,
but
ladies
with the
and
big
gentlemen.
5,
Let's
big 6.
go.
That's what a lot of the street commentary is
All
focusing
right.
on.
So nice little bounce off of the 60 area.
And I'm not trying to play down
Okay.
the
Dow
success that
Jones
Sean
looking
Fain and his team
good.
have had over the last month
Dow
and a half.
Jones
There's
looking
no
real
doubt they
good.
have momentum. And there's no doubt that it's
Taking a
and
long
Toyota
position
playing
on the
Kentucky,
Dow.
they're not looking around going, pretty good. Having
Okay,
said that,
retracement under
having
70.
said that, they have a long track record of being unable to unionize, and Toyota, Nissan, they just haven't done it. And they've been
Okay.
talking about it for 30, 40 years. So at what point does that change? Is this the contract that changes that? Maybe, but that's what you have to keep in mind.
I swear CNBC is always late. Like literally a full minute. Okay, okay.
Financial services celebrating 125.
Give me a second, guys.
I think that what Bill said is very important in the sense that Fain outsmarted them, and the fact that Fain.
I know ES could possibly push another 10 points.
Getting their way, and
Damn.
Treasury is getting
Okay,
in the
Dow
way
Jones looking
with
good.
gigantic issuance, and that's why individual companies are really struggling.
I'm gonna move my stop loss on Dow Jones to
Because you really have
to
just
break
defend
even,
yourself.
just to be on the safe side.
Union fray,
Okay,
yield
just to
curve
be on the
fray.
safe
These are
side.
major headwinds that we haven't seen since the 90s.
Going Jay's way, as you like to say.
All right, stop loss has now been moved to break even on the Dow Jones. See if this could pop another 40, 50 points before maybe taking profits. Although it's not a bad idea to lock in some profits right now because we could fully retrace. So I probably should do that.
If people are worried that the Chinese own too much, I mean, please come back, China. They have 800 billion. They're like selling them like they're
Oh, that
running
is a
out of
key question. It's not just the supply, but obviously it's the other side. It's
Yes.
the demand and the what doesn't seem to be nearly as much demand
And QT.
from buyers such as China or even Japan. Right to your point.
So liquidity.
Yeah, and that's why we're also going to be watching
Okay,
very closely. I think it's
okay.
Wednesday when
Oh,
we get the actual plan
retracement.
from the Treasury in terms of how much supply will be issued over the next few months. It's not something that has typically been a focus for the market, but it is now.
I'm gonna scale in 1 micro on NASDAQ. I'm scaling in 1 micro on NASDAQ. I'm gonna risk 40 points on this. If we can break, if NASDAQ cannot break over this morning's highs, let me point that out. So if NASDAQ can't break above here, I'm gonna take profits and then fully wait for a retracement to get long. So let me set an alert. So I'm gonna create an alert at 14,304, 14,000 at or below.
We just wrapped up a near 5% GDP print.
Okay, created.
Look, the GDP is terrific. Anybody who favors that wins.
And just a heads up, guys, before the end of the stream, or at least tomorrow, I know I said that I was going to create a free Telegram to where I'll be able to still post my trades when I'm not streaming. I will be posting that link tomorrow. So be on the lookout for that. So tomorrow I will be, ooh, yes, go baby, go baby, go. Ooh, right there. Ooh, let's go. Yes, Nas. Yes, let's go. Okay, okay. You go, girl. Go, 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 go. Do your thing. Yes, baby. Ooh, pop, pop, pop for me. Pop for me. Yes, let's go. My stop on US 30 Dow Jones has been hit. Let me take some profits here on NQ. Go baby, go baby. You not streaming soon? No, I'm streaming. Wait, can you see my stream? No, basically, so you excuse me. So you guys know that like I'll stream from either 8:30 to 11, or I'll stream from 9 a.m. to 11:30. Because 9. Yeah, no, I'll still be streaming, but I'm saying like once I jump off, so like today I'm gonna jump off at 11, right? And so today I'm gonna be jumping off every day for the most part. I jump off at 11:30, but I'm still taking trades throughout the day. So let's say at 2 p.m. in the afternoon, I take a trade. I might be mobile. I might be at the gym. I might be at the bank, or I might be out to eat. Out to eat. And if I take a trade, I'm not in front of my desk right now to be like, come on, and be like, oh hey, I just took a trade for you guys to get that alert. So by me having a free Telegram for you guys, it's a channel where you guys will be able to get alerts via your phone or whatever device you have it on. So whenever I'm away from my desk, like if I'm traveling, if I'm on a boat or on a yacht in the Middle East and I take a trade, I can pop right in there. Hey, screenshot. I took this trade here. This is my stop loss. This is my take profit. And then boom, y'all follow if you want. If you like what you see, you can take it. If you don't, you don't. So I just want to be able to offer you guys that opportunity because we're getting towards the end of the year and we're going to have a lot of volatility. And let's say I come in at the end of the day and I take a trade at the end of the day. I'm not on the stream, so you're not going to be able to know. So I just want to keep you guys more informed as to the trades I'm taking, so that way you have more availability to take a trade. Like sometimes some of you guys will hop on the stream a little late. By the time some of you guys are hopping on the stream, I'm already jumping off. The trades was already made. But I'll take trades in the afternoon. And a lot of you guys know I trade the Asian session. I trade the London session. Whenever I see an opportunity, I'm shooting my shot. So if I take a trade at 7 p.m., I'm not in front of the computer, right? So I can't alert you guys to it. But if I got the telegrams like, oh, boom, I just took a trade. Now you get that alert. Now you're able to, capitalize as I am. Ooh, yes. Danger. Okay. And then Q is just going, huh? Holla. Holla, Nas. Holla. Holla if you got $1, baby. Great idea. Okay. Awesome, man. Yeah, so, I'm thinking of you guys, man. I want you guys to be able to, catch. Ooh. And Q.
Order filled.
Okay. Taking profits on NQ. Woo. That's it. Let's go. Look at ES. She flying. She says, I'm gonzo. Damn.
Is simply Sammer and perhaps another agency taking their time and working its way through, and therefore soon means in the next few days. Now, I would also add, I don't care how deep you think you are in China in terms of understanding what's going on, it's still a black box.
Very true.
And he expected they would be able to close today, and that was wrong.
I agree with you. I know that another way to look at it, choose a chess analogy. I don't think that Hong Tan is a pawn in this, U.S. versus China. I do believe that there is a tremendous amount of paperwork to be done. However, I think that if you want to take his comments to the bank, that's probably a mistake, because that means that you think that you have an edge on China. I don't think anyone has an edge on China.
No, it's so difficult. So you really are left just guessing.
Yes.
But again, we can't share at least what we're hearing, which is that Mr. Tan does believe it's bureaucratic, not political.
And he does say,
Take it for what it's worth.
if anyone's going to get some,
Let's go. Yeah, buddy. Ooh. NQ, great trade. Thank you, man. You know how we do out here, man. You know how we do. Gone, baby, gone. Are y'all ready to see some excitement, some wild numbers?
China's the worst.
Even though they also are they are playing everybody's biggest in terms of renewables, and they also put a coal plant all the time.
I want to know why.
Today, I officially started trading 7 figures. So y'all about to see some ridiculous P&L.
It's just never mind. I'm just.
Thank you, man. I'm excited, man. I'm excited. Yes, sir. Yes, sir.
I'm just trying to entertain our viewers who are tired of losing money.
Well, they may be tired of it. Doesn't mean they're tired of us.
I think Gavin Newsom's a very smart guy.
Rub. Do like Birdman. Rub hands together. Longs. I'm only looking for longs today. Yeah, I'm only looking for longs because again, we have this gap to the upside. Some really good positive news over the weekend, which is why the market gapped up. So right now I'm not ideally looking for a short. I'm long, and I'm all out of my NQ long. I would really like a decent retracement from your prop, not from my prop firm. No, listen, I am not trading with my prop firm because I don't want people accusing me of server manipulation or account manipulation, because I have access to all of that back end stuff to where I can deposit or withdraw money from an account. And when I deposit and withdraw money from the account, it'll make it look like, oh, I made X amount and then I made a withdrawal. And I just don't want that to be associated with the firm. So I am not, nor will I ever trade with my own prop firm, because I don't want people to accuse me of manipulating and being a false trader, which all of you guys have been here. You guys know, like, my analysis be on point. We be out here printing money. So I will trade with any and all other firms and personal capital before I trade with my own firm, because I want that level of transparency and just knowing that, okay, like, I'm not doing any funny stuff on the back end, right? Like, I'm not going to sit here and prop myself to make it look like I'm making, mad money on my firm, which it is possible for me to do, but I don't want that. So that's why I will not now nor ever trade with my own funding firm. So I hope you guys get that, and it makes sense, because again, because I have access to all that back end stuff, I'm able to, I could literally go and make a quick deposit of 300K in an account, and then I can withdraw 100K and it'll look like, oh, I took out 100K from that account. Or I can deposit 200K and then I can add another 100K, which then it'll make it look like, oh, I made $100,000 in profits. which would be false. So I don't want to mislead people, and I just don't want any type of negativity or scam to be associated with me or with my firm. So for those reasons, I will not trade with my own prop firm. So all my funding is with other firms and personal capital. So I'm doing a combination of trading personal capital and funded accounts. And today, your boy crossed that 7-figure mark. So when y'all start seeing me posting these 50, 100, 100K or 60K days or 80K days, just know that it's coming from a 6-figure account. So the percentage, I have to like play with the percentage. So I want to say it'll probably, I don't know, 80K day. I mean, it'll be like less than 1% of the account. Let me see. Five. Okay, so. So it'll be a little over 1%. So any day that you see me doing like 60K in that day or 80K that day, that's like 1%. Hey boss, how long did it? It took some time. Realistically, like it'll take about a year or so with funding firms for you to hit that mark, depending on which firm. Like some firms, they every month that you hit at least a minimum of 10%, they will increase the value of your account by 30 to 40%. So it'll take some time, at least a year or so, for you to hit a mil in funding, a little bit more to hit an even higher amount. So definitely something that is doable. What is the new? Oh, NQ still going. Ooh, she said hello. Beautiful, beautiful, baby. Beautiful. Oof. Just marvelous. Just marvelous. And, I guess I should have left a runner on my NQ. 2000. Could have been a nice 40K morning so far, but it's all good. We starting off slow.
Which indicated that Siebert's been the principal promoter, David, of this very strong.
Yeah, same here. But hey, listen, man, we still got plenty of time in the day. It's only 9:46, right? So we got plenty of time to knock this out the park. And oh baby, yes, you know what? I'm re-entering Dow Jones long. Oh my gosh, NQ, baby. Let me, okay, where we at? YM is going. YM is going. Order filled. Okay, so I'm scaling back into Dow Jones longs. Let's go, baby. Come on. Get up there. Get up there. Bust this move for us. We want the smoke. I would love to see and was it Dow head up to like 32,950. Like, come on, baby. There you go. Come on. Come on, baby. Come on. My entry is 32,833 on NQ. I'm sorry, on YM Dow Jones. 32,833. Come on, stop playing with me. Oh my gosh, NQ, baby girl. Left you too soon. Like I left you too soon, baby. Habibi.
seemed obvious given Trian's size
weren't
of
you shocked
Trian's
that was
teams where they actually had Perlmutter as part of their effort. That's
Just trying to go into your world and get out of my Oscar world.
Yeah, I know. I don't have answers for
Who's
you.
had 4 Oscars?
Who's had 4 Oscars?
There's one person's won 4 Oscars.
Really?
Yeah. Meryl's 3?
No.
She won 3. Yeah, Meryl Streep said 3.
You are full of trivia today.
I just find myself focused after I had Cries and Mattel, and that stock didn't work. I'm going back and seeing what movies impacted TV. We have to go. Jeez.
Jim's right, though. Market looks pretty good for the moment. Dow at 320, back to 4162. Quick reminder,
Come on,
you can
Dow.
always get in on the CNBC Investing Club with Jim. Sign up and find out more at cnbc.com/join the club or use the QR code on your screen. As for bonds this week, a lot of data headed our way, not just the Fed meeting, but some PMIs. Jobs Friday, of course, coming up on Friday.
Yo, I gotta tell you, man, this P&L is ridiculous. In this low 30-point drop on the Dow, I'm negative $3,200. Woo! Type of stuff would make you bite your teeth. I mean, bite your nails. Like, whoa. Profits is profits indeed. 100%. Come on down. Yeah, I should push a little bit more. Come on, I need the Dow. Stop playing. I'm gonna set alert. See if we can get over this 850. At or above. Come on, baby. There you go. There we go. The Dow is really, really lagging. Come on. Yeah, ES is pushing, NASDAQ is pushing. The Dow's gonna catch up. I'm still in the Dow. My entry is 32,833. So I'm down a little over 30 points right now. Shit. Come on, bro.
Pretty decent open here. Major indices up between 1 and 1.5%. NASDAQ is leading. All sectors, at least on the S&P, are green for now. And the VIX right around 20. CNBC's Evolve Global Summit, by the way, is virtual this Thursday, November 2nd. We're going to gather leaders and innovators from around the world, talk about strategies and tactics necessary for adapting, innovating, and changing in this new era of business. You can scan the QR code or just register at cnbcevents.com/evolve.
Nice, nice. Well done. Come on, bro. Come on. There you go. Pop, baby. Come on. Get out there. Get out there. Come on. There you go. Come on, baby. Come on. Keep it going. Keep it going for me. Mm-mm-mm. There we go. Come on. Yes. Pop, baby. Pop, pop, pop. There you go. Come on.
.com.
Let's get to Jim and stop trading.
A lot of people have asked me, look, what defense contractor has been left behind? This morning, Raymond James goes from hold to buy for L3 Harris. This is a remarkable company that probably has many,
There
many
you
orders.
go. Keep it going, baby. Come on.
And it's really, it opened the market. It opened 10 points off its low. Its high was 250. So I endorse this. I think if you feel like that there's going to be a huge defense budget, as I do, this is the one that's going to get more than its fair share.
Order filled.
How about tonight, Jim?
Okay, a lot of people are saying, what is going to happen with Bracken Darrell and VF Corp? There's not one but two activists, David, in Bracken Darrell, and it's good to find out because that's the first time he's spoken publicly. He used to be at Logitech. And Josh Weinstein, there is a lot of feeling that these the cruise companies aren't getting their due. The wave season was great. There's been a lot of people just
Order
like
filled.
signing up, but the stocks are nowhere. So
Adding
let's
to
find out.
my and Dow Jones long. Let's go.
You got to find out what the heck is going on with the consumer because so many people have written them off, and yet why are they taking so many cruises and going places?
You started the show kind of
Let's
depressed.
go.
I mean, you feel any better with the Nasdaq up 1.4%?
No, I think it's a great opportunity to be able to say,
up?
yeah, I do. There's nothing cooking. Nothing cooking.
Unlike him.
To be clear-headed and somewhat negative, or is it about deserves got nothing to do with it?
Jim, we'll see you at 6. Mad Money, 6 p.m. Eastern Time. As we go to break, we are getting a bounce here after a tough stretch. Of course, we all know how treacherous October has been. We'll wrap up these last 2 days of the month in a moment.
the pullback.
Welcome to another hour of Squawk on the Street. I'm Sarah Eisen, talking to me and David.
Give me 1 minute, guys. Be right back.
Here at the New York Stock Exchange. Take a look at stocks starting off the week strong. The S&P 500 up more than 1%, actually bouncing back from a big down week last week. And you do have every sector higher right now. Energy's underperforming. It's only up 0.25%. Strength in technology, communication services, consumer discretionary, bouncing back from a tough reaction, I would say, last week to earnings, especially from some of the Magnificent Seven. Show you the picture in treasuries, which is always important. And we're starting the week with more selling, so keep an eye on that. 10-year note yield is still firmly below that 5% level, but it's going to get a number of tests this week. We've got a Fed, we've got a Bank of Japan, we've got a lot of economic data to talk about, including jobs. We'll preview that for you in just a moment. But we're 30 minutes here in the trading session. Here's some movers we're watching. Earnings out of SoFi and McDonald's, sending those shares higher, though McDonald's is off the highs. SoFi CEO joins us first on CNBC in just a moment. We're going to read also on McDonald's with the #1 restaurant analyst in the sector. Western Digital surging as well, one of the top gainers, in fact, on the S&P 500 after announcing plans to split its disk drive and flash memory business into two independent companies. And then we're also watching Microsoft today. Now, the only mega cap still trading above its 50-day moving average. Some technical levels breaking down last week on the back of a sell-off. But guys, this is a big week. It's one of those weeks where if you're focused on macro, you cannot miss it. And that's because it starts tonight, Tuesday, Bank of Japan meeting. Why is this one so important? Well, they're expected to announce a big adjustment to their yield control, their yield curve control, because they're facing some upside risk on growth and inflation. So that's tonight. But we're also going to get a lot of earnings. We're going to get the Fed decision on Wednesday. We're going to get a jobs report on Friday. I would say the JOLTS report is also really important. That's the job openings and labor turnover, which comes the same day as the private sector read on jobs, the ADP report. And then, I've been flagging this Treasury refunding announcement on Wednesday. I'm actually going to say today is important on that front as well, because today is when we get the financing announcement from the Treasury. And it's a little different than Wednesday's refunding announcement. Here's the difference. Today, we're going to learn how much the Treasury needs to borrow in the fourth quarter. So these last 3 months of the year. That July 31st date that a lot of people look at that may have spooked investors, both stocks and bonds, that was when the actual financing news came out, which is when Janet Yellen and the Treasury said we're going to have to borrow more than $1 trillion in the fourth quarter, which was a lot higher than expected.
When do we get this? What
this
time?
is 3 p.m. today.
Okay. All right. I thought that we were getting that Wednesday. So what do we get on Wednesday?
Wednesday's
then?
the breakdown of the auction sizes and how they're going to issue it. Both of them, from my research, can be tradable events. Because is it going to skew toward more bills this time? Last time, the auction skewed a little bit toward longer treasuries, which caused some concern about the longer term.
But we're going to know the number.
We're going to know the number today at 3 p.m.
Okay.
And that's the financing announcement.
That's important.
That's
if
important.
it comes well above, I don't know if there are expectations.
There are expectations.
What are they?
$852 billion is what they said last quarter they would need to borrow this quarter.
Okay.
And what happened last time around is that the $1 trillion number came in $200 or $300 billion more than their previous forecast. So
Right.
$852 billion is kind of the number to watch. If it goes $200 or $300 billion more than that, that could cause some concern.
Well, receipts have been lagging, basically. I mean, you haven't been collecting as much in tax revenues.
That's part of the problem.
Yeah.
Net interest costs. I mean, the government is paying a lot more.
$634 billion
borrow.
a year in interest costs right now.
Capital gains have been a little bit weaker as far as, bringing in tax money in the last year or so. So the Fed is not buying treasuries is the backdrop here. And there's been demand. I don't want to raise some alarm bells about demand. Asset managers and institutional buyers have been there and they've stepped in, especially on the shorter end. But it does bring the focus on the deficit and just how much we're going to need to fund it. Also, I would say that the Janet Yellen, Treasury Secretary, comments lately have been the rise in long-term bond yields. That's not because of the deficit; it's because of growth. And you could make
Kind
that
of a
argument as
reversal.
well. But it does suggest that she's not particularly concerned about the size.
Wow, we had this discussion with Jim a few moments ago about her comments last week about this being more about economic growth. We just do a giant GDP number
We did.
for the last quarter, although expectations for Q4 are now more in the, say, 1.6, I think is where Goldman is.
Which is a big step back, I think, from the 4.9% growth that we had. Still points to robust growth. That's why the jobs numbers are going to be so important. And as far as the Fed, it's kind of the least. It's the least suspenseful event of the week because there's nearly 100% odds that they do nothing. And we just heard from Powell ahead of the blackout phase where he said, we're going to proceed cautiously. And the data suggests that they can do that. There's still only a 20% or so chance that they're going to raise interest rates in December. They've seen strong data, but David, here's my chart of the day, which is, and Carl, the financial conditions are tightening. And that goes along with higher mortgage rates and higher yields and a stronger dollar. And what you can see is the top one is the mortgage rate, the 30-year. That's the way the Fed is tightening the economy. And then the blue line, while they're not as tight as they have been, financial conditions, they are tightening. And that's the whole, let's see if the market's going to do the Fed's work for it and slow the economy. And that's something they're increasingly paying attention to and watching, and allows them to proceed cautiously, suggesting maybe they can be done with raising rates. They're not going to all out say it. The other point of caution, I would say, is what we've heard from companies and earnings. And we've highlighted that the earnings may have been better or maybe better, but the outlooks are definitely more cautious. Here's what McDonald's CEO in the last hour said on the call about the consumer.
Specific to the U.S., we've been talking about how the
Good
consumer
morning, Ronnie.
is more discriminating because of all the price pressures that they're facing.
Yes, I am.
As well as interest rates, things like that. What you end up seeing is that the pressure is felt more on the
But
lower
I'm
income,
liking the Dow.
consumer, and so one of the things
I'm liking the Dow more just because it has more room to catch up to Nasdaq and ES. But let's see.
Still talking about the pressure on the low income consumer, which is definitely a theme in this earnings and has been for the last few quarters. But
I'm setting a buy limit
still speaks to the fact
on
that there's
NQ
of higher rates,
right
despite this
here
very strong jobs number and growth
at
numbers that we've been seeing.
14,390. But I'm gonna start off with the micros again, and then once I get confirmation, I'll add the mini.
As you know, around correction territory, let's bring in senior markets commentator Mike Santoli, get his take. I guess on the recent slide, and we got some desks cutting their year-end targets as a result.
Yeah, everyone's kind of marking their view to market to a degree. So yeah, down 10% in 3 months, also down 10% over the past 2 years. I think that's also relevant in terms of where we sit relative to the old highs. Remember, the NASDAQ peaked in November 2021. We're coming up on the second anniversary of that. At the same time, over the same 3 months, the forward estimates for S&P earnings have inched higher. So they're about 3% higher. So to whatever degree we had a serious valuation problem across the market 3 months ago, it's less so now. The real issue to me is market is really looking right through all the strong economic numbers right now. If you look at the way industrials and transports have traded in the last few months, as rates have gone up, as investors have basically manifest this fear through the tighter financial conditions Sarah's talking about, that the economy really can't handle it that easily, that sort of shows you've given up whatever advantage you had in the cyclical parts of this market. Now, the question is, if you want to take the other side of that, if you want to say that this is going to be more resilient economy, the Fed's just about done, are yields topping? Who knows? Honestly, who knows? They're in an uptrend right now. We have to see them kind of absorb all the other supply news and everything else. But all that built to a pretty significant oversold condition today. We'll get this bounce. My standard for whether this is more than just a basic reflex bounce is probably up another 2 to 3% minimum, 42.75, because otherwise a typical oversold rally, if nothing more than that, it's going to stall around that 20-day average on the technical side.
Mike, we got a couple of
Let's
negative
go.
notes, not unexpectedly. Mike Wilson this morning. You got Dubravko as well at JP Morgan. I don't know if you saw.
Yes, absolutely.
I'm sure. So just like your take, because it's very negative, but basically says, given the move up in short-term real rates and the total, in terms of overall current level of real rates, the S&P 500 multiples 2.4 times overvalued.
Yes, if you did a standard, okay, real rates are 2.5% or whatever, so inflation-adjusted rates. Where does that bring us based on historical averages? Yeah, it does get you a little bit rich. The problem is, if you want to complain that the overall index is rich, the market cap weighting results in a lot of that, right? So it's the top 5 stocks that drag the multiple from somewhere like 14 up to 17. So you can decide whether you want to grade on that curve or not. But I do think it's a significant challenge. To me, it's all about, are the yields going to really ding the economy and therefore earnings much more than are yields just going to translate through the valuation algebra to a lower stock market? Because to me, if your earnings are growing and the economy is okay, you only have so much downside.
Which is why I highlight things like the Bank of Japan. It's like you might think, who cares? But actually, it's a pressure point and could let the 10-year, our 10-year, go back above 5%, depending on what's priced in there. It's bond bearish.
Everything
Just another
coincided. The Bank of Japan adjusting yield curve control came right with the last Treasury refunding announcement in late July. It enabled everybody to say, aha, the thing I've been warning about for all along, why yields are too low, is coming to roost. But also, the economy's strong enough that it's not weird to have near 5% long-term yields when the Fed funds are near 5. So you have to kind of build all that. And by the way, my favorite thing, though, is everybody's fixated on the Treasury supply stuff this week. Rightly so. It reminds me of when we were all fixated on the Fed's H8 report every
things
week
we never
after the
used to
Richmond
care
Bank. And guess what? We don't care about it now, really, because it kind of passed. The storm passed, and all of a sudden it's not a market mover. But for now, this one is.
Thank goodness for those esoteric releases from Treasury and the Fed.
3 p.m. today, Mike. 3
plenty to worry
p.m.
about.
today, we find out
Financing.
financing number.
Will be
And then on Wednesday, we just find out the cadence in terms of what they're actually
how
going to
much
issue.
Damn, ES not looking so hot.
Yeah.
Look at you.
I'm listening to you, but I thought Wednesday, and then today you tripped me up because then you suddenly tell me I got to pay attention.
So the numbers come first, and then the breakdown.
All right, thanks, Mike. Let's get to big news this morning. Of course, the strike's apparently over from the UAW, reaching tentative deals with Stellantis and GM. Let's get to Phil LeBeau to fill us in on what's going on. Phil.
David, 45 days. After 45 days of picketing, all of the UAW strikes revolving around the big 3 have been at least temporarily resolved. We think they're going to be permanently resolved. Tentative agreements have been reached with everybody. Let's take a look at shares of General Motors. They reached a tentative agreement
late to
with
the
UAW
games.
within the last half hour. We reached out to the UAW as well as GM.
How far behind do they move it to?
But generally speaking, this is what we expect. What we've seen from Ford, what we're seeing from Stellantis, you're looking at a 25% pay raise over the next 4.5 years for UAW members, over 30% when you factor in cost of living adjustments, much higher wages for new hires and temporary hires, and greater retiree benefits. Stellantis also won a big commitment. The UAW won a big commitment from Stellantis. Stellantis agreeing to reopen its plant just outside of Rockford, Illinois. They're also going to be putting a battery facility there. That's a huge win for the UAW. And then as you take a look at shares of Ford, keep in mind that Ford has said they are gradually resuming production at the plants that were on strike over the last month and 3 weeks, month and a week or two. So the bottom line is this, guys. We will get details and the ratification votes. The details we'll get over the next couple of days on Stellantis and GM. Ratification votes will take place over the next week or two. Guys, back to you.
All right, Phil, thank you. Phil LeBeau, got breaking news on GM's deal. Oil prices are easing right now despite Mideast tensions rising. Today, the World Bank said oil prices could reach, quote, uncharted waters if the Israel-Hamas war escalates. His comments coming as this conflict enters its 24th day now. Let's get to NBC's Jay Gray, who's live in Tel Aviv with the very latest. Jay.
Hey there, good morning. And for something that's unfolding right now, Hamas has released a video with 3 of the hostages that are being held out. Obviously, we're not going to show you that video to protect the identity of
There goes the dino.
video. And we have no idea what's going on before or during this video, behind the camera, what type of duress they're in. What we can tell you is that one of the women in this video, and it's 3 women, one of them is very angry with Israeli Prime Minister Benjamin Netanyahu, blaming him for the October 7th attacks, saying that there was no preparation and no help there, and then talking about the idea that she wants him to facilitate the release of all of the hostages by releasing all of the Palestinian prisoners currently being held by Israel. That's some 6,000 plus right now. And again, I think it bears repeating. We don't know the duress that these women are under. We don't know exactly the circumstances surrounding this video, but it has been released and released without any warning from Hamas. Let's talk about the expanding ground
Stay with the
advance
bullshit.
right now by Israeli Defense Forces. They are gathering more land in Gaza. We are told that that will continue, that they will continue to slowly move forward, identifying targets, more than 600 in the last 24 hours. We know that they have hit weapon depots, dozens of anti-tank installations, as well as command and control centers, they are telling us. And it appears the current strategy is that they identify areas of interest and areas of targets. There are airstrikes that move in. There are strikes now from the Israeli Navy off the coast. And then the ground advance moves slowly forward. So instead of what many thought would be just a very aggressive push on the ground once inside it, it appears that they are doing this in slices, moving forward, setting a defensive front, and then continuing to push on. So that's the latest on the ground there. As for humanitarian aid, we know that it's desperately needed. We know that fuel is something that is in very small supply and is not going to come in, according to the IDF, until this war is over. There appears to be some movement on the idea that Israeli forces will allow more trucks to move in, and we've seen more move in over the last 24 hours than we've seen since the start of the war here. Now, more in one day, I should point out. Water, food, medicine, but again, without fuel, it's really starting to crumble inside. We've seen thousands breaking into UN warehouses to take just the basics, flour, hygiene supplies, and so that's something everyone is watching very closely.
Aren't there reports, Jay, that Hamas has plenty of fuel, certainly for the rockets that they're firing? Are they keeping it from civilians?
That is what the IDF says. They have said repeatedly and posted on social media, hey, we need fuel
yeah,
inside
that's a
Gaza.
pretty.
Ask Hamas for it. So they feel like Hamas has plenty of fuel, and they've actually shown
Let's
some of the
see.
depots
Did I
where
get
they believe
filled?
that fuel is located.
I haven't quite yet gotten filled on my NQ long yet.
This
I
evening.
got close to
As
it.
we head to break, here's our roadmap for you for the rest of the hour on this show. SoFi CEO Anthony Noto and shares of that name pop double digits on strong results.
Plus Fund Strats Tom Lee, it's the big week for economic data and the Fed. Why he's calling for an end to the quote negative doom for stocks.
And finally, you got the street's top restaurant analyst calling McDonald's a buy here, forecasting even more gains ahead for the name. Don't miss that. Big show still ahead. Don't go away.
Sheesh. And I am now filled on my NQ micro long. This is looking crazy. Okay. Ooh. Okay, nice little pop on the Dow. Oh, so much divergence right now.
Shows
I think the
SoFi
move for
up
the
well
morning
over
might have been
1%.
it.
Reported
We
strong
got
expected
about
revenue for
a
the
little
quarter,
over
both
30
consumer and
minutes
fleet.
left before the
AB's
London
doing
market
per unit. Company also
closes.
raised its guidance for the current quarter. Let's get to SoFi CEO Anthony Noto joining us in a first on CNBC. Always good to see you. Student loans, at least the analysts seem to be a bit short here in terms of what they anticipated. It may have come in, I think on the call, you sort of seemed to indicate you expected that surge, but tell us a bit about that and what you're seeing there.
NQ could be going for that gap fill.
Anthony, and it gets back to normal, or is there going to be significant demand for these loans for some time?
Yeah, so David, I think there's just a misperception that student loans were a big driver in the quarter. They were not. 67% of our absolute growth in revenue dollars was from non-lending, so our technology platform business, as well as our financial services business, which includes checking and savings, invest, and credit card. We did see a recovery in the student loan business from about $400 million of origination volume to $900 million of origination volume, but it wasn't that big of an impact on the overall P&L, just given how those loans are valued. So the bigger driver of it was the really strong performance from tech platform and financial services, and still continued strong demand for personal loans. On the student loan side, to answer your question specifically, we think it will be a slow, steady, gradual increase over time, and that we're not going to get back to where we were in the fourth quarter of 2019, which was about $2.4 billion origination volume a quarter for some time period, probably not until 2025.
Got it. Well, on the call as well, you seem to try to focus the analysts on the technology platform. Explain to our viewers what you're talking about here, Anthony, when you say the pipeline there is pretty visible and it's the most robust I've seen. Just explain what exactly that means.
Sure. Our technology platform has a number of different products, but we're essentially providing processing, debit and ACH processing on the platform with a number of APIs that allows a developer to build just an app on top of it. It could be for a consumer-facing bank. It could be for B2B services. It could be for government payment services. In addition to that, we have what's called the core banking platform, which is branded Technisys, which is really an operating system for different products, whether it's checking or savings or a credit card or loans. We bought two businesses over the last 5 years to really empower SoFi, but they also power third parties, about 135 million accounts and over 8 billion transactions a year. And so what we're seeing in a big way is traditional banks, large incumbent banks, looking to upgrade to a modern processor, which Galileo is in the cloud, as well as a modern core. And so we've, throughout the quarter, have been responding to a number of RFPs from the largest banks in our country as they're evaluating updating that technology. We're also seeing a lot of demand from other incumbents that want to switch to us that are not big, large banks, but they are financial institutions where they have a large amount of payments or direct consumer offerings in terms of checking and savings accounts or other financial products. So seeing a nice pickup.
Awesome TT.
Industry to upgrade their ability to manage assets and liabilities in real time.
Anthony, it's Sarah. You sounded pretty upbeat about the macro environment on the call. Can you tell us, first of all, you have a unique demographic that you serve, and what sort of consumer trends you're seeing so far into October?
Yeah, so I want to be very clear for the audience that SoFi is taking market share from incumbents, and so we're not really a key indicator of the economic environment or the cycle. We're a secular grower, which means we're gaining market share from an existing market, even if that market's not growing. So we're still seeing very strong demand for our loan products that are very differentiated. Our SoFi checking account, we offer 4.6% interest, no fees. You get a free certified financial planner. You can pay anybody, anywhere with your phone or debit card or P2P by just having their phone number. That product is seeing a significant amount of demand as well. And in that product, we are seeing an increase in deposits per account, which is more of a measure of how the economy is, as well as increased spending per account, as opposed to just being driven by new account openings. We're also seeing good increases in AUM. That's in our invest business. That's clearly a market share gain on the back of doing 3 IPOs. So we're still seeing really strong demand for our products. I would say more broadly,
Yeah.
if we're going to be in an environment that's higher for longer, I'm really worried about the conditions in the financial industry more broadly, and that will cause us to be more conservative and more balanced to make sure we maintain the right safety and soundness of our balance sheet and our ability to serve our members.
Oh, that's it. Well, that's interesting. I was going to ask you how much of the deposit growth is from people who are using you as the primary bank. So can you answer that and talk a little bit more about what you're concerned about in the system?
Sure. We added $2.9 billion of deposits. We're unique in that we're adding really strong deposits, and they're really high quality. 90% of our $15.7 billion deposits that are from consumers are from direct deposit customers. So they're sticky customers that are using us as their primary bank. And in fact, we shared for the first time that we had over $1 billion of spending in the quarter through debit spend through those accounts, and that's now annualized at $5 billion of spending. In addition to that, we're seeing really strong trends in the ability to bring in deposits that are diversified. So 98% of our deposits are insured deposits, which means they're diversified. So, a lot of banks are not seeing deposit growth, and in addition to that, they can't offset the higher rates with hedges or passing on higher rates to consumers and loans, both of which we can do because we have the ability to manage our assets and liabilities in real time.
But Anthony, just to come back to it, you had mentioned on your last answer that you were concerned at least higher for longer could bring some, I don't want to use the word that you don't comfortable with, but perhaps some dislocation among some of the larger financial companies. Can you sort of explain how you're seeing things?
Sure. At SoFi, we feel really great about the quality of our loans. We have a high-end customer with FICO scores that average 750 and high income at over $150,000. And our life of loan losses are not even back to where they were in 2019, although we expect them to get back to that level. And our student loans are really performing quite well with less than a 1% life of loan loss. What I'm worried about is the unrealized gains that are out there in the financial services industry. We aggregate off of bank reports each quarter the total amount of unrealized losses in the industry. And that's approaching $1 trillion in this high $700 billion range. And if you take rates up another 25 to 50 basis points against that portfolio of assets, it's only going to increase the amount of unrealized losses that are going to have to either be funded with additional capital or have to outperform as it relates to the longevity and duration of those loans. So it's a real risk for the financial services industry as a whole.
Yeah. Although many of them are not losses that have
Would
to be
love, yes, a reversal about now would be good,
You
but
know,
we'll probably see the
issue with
reversal a
you
little
have
later in the
deposits,
day.
doesn't it? Other than on your NIM.
Yes, I agree 100%. That's what I was trying to allude to. If you can hold the loan to its maturation, to its duration, and it pulls the part and performs, they're fine. If there's a deposit issue that has to be paid out, then those assets would have to be sold to pay out those deposits. That's the real risk.
Anthony, always appreciate it. Thank you for spending some time with us.
Thank you, David.
Still to come, what investors need to know ahead of Apple's big product event tonight. What the street is focusing on ahead of Apple's earnings later this week. We're back in just
Looking
2
like
minutes
that
here.
gap
Let's go
fill
on the
is
street,
coming.
down more than 250 points.
Yeah, definitely looking like the gap fill is coming. Mm, mm, mm. Oof. All right, half hour to go, guys. Dow to the upside on the Dow. I was looking for a movement up to at least 32,950, possibly 33,000. But it does have this gap to fill, so if it breaks below 32,690, I'll take the loss on the micros and I'll revisit the trade later today. I do have a buy limit on ES at 41.43. Start scaling in.
Tessa Brewer, here's your CNBC News update this hour. Inside Gaza, Israel's ground operations are expanding. The chief spokesperson for Israel's military says it's progressing gradually. The UN Security Council is also preparing for an emergency meeting today where the United Arab Emirates will reportedly seek resolution for a humanitarian pause in the fighting. Arguments begin today in Denver in a lawsuit seeking to ban former President Donald Trump from the Colorado ballot because of his role on January 6th. That lawsuit was filed on behalf of 6 voters in Denver.
What a pop.
And authorities in Los Angeles say the initial autopsy results from Matthew Perry are inconclusive, and the cause of death has been deferred pending a toxicology report. The Friends star died Saturday after an apparent drowning at his LA home. Sarah?
Let's rip. Let's see.
Apple shares are trading higher ahead of its new product event tonight called Scary Fest.
Come on, give me
And the event,
40.
of course, comes ahead of Halloween.
I'm gonna try to add one more contract, but this one I'm gonna do with the mini on the Dow Jones at 32,740. Don't know if I can get it.
Apple's expected to update its Mac lineup with a new chip called the M3. That's the 3rd generation of its in-house chip for Mac computers. Apple calling the event Scary Fast, so expect a lot of talk about the M3's performance and plenty of goofy Halloween dad jokes. Apple loves to do that kind of stuff. Announcement coming after Qualcomm last week revealed its new computer chips, boasting they were faster than Apple's. That could change tonight. More important, though, Apple reporting Q4 earnings this Thursday. Company already told us to expect a 4th quarter in a row of declining sales. Morgan Stanley out with a note this morning, though, that the 4th quarter will likely beat the street's muted expectations, but also expecting disappointing guidance for the holiday quarter, citing supply-demand dynamics with the new iPhone 15 lineup.
Okay, I'm gonna try
iMacs
50.
I just mentioned, not expected to help much. PC demand still down after all that pandemic buying. Not to mention the headwinds in China. KeyBank pointing out today the strong U.S. dollar
Order filled.
competition from China's Huawei as primary concerns for Apple's holiday quarter in that country. Now, despite all those headwinds, JP Morgan analysts this morning say they expect Apple to guide towards top-line growth this quarter after a full fiscal year of declining sales. Though comps, well, they're much easier after last year's supply chain problems in China. Carl, send things back over to you.
Steve will be on the lookout tonight, and of course later in the week. That's our Steve Kovac on Apple. Coming up after the break, a longtime market bull, Fundstrat co-founder Tom Lee, going to lay out what it might take.
So I added at 42,750. Yes, 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 yes. My stop loss is gonna be 32,700 even, so I'm only gonna risk about 50 points on this Dow Jones ad, which is on the actual mini. Okay, nice. That was a really good ad. Yeah, baby. Come on. Can we get over 800?
By Bose today.
FTX founder Sam Bankman-Fried back on the stand today after starting to tell his side of the story on Friday. Kate Rooney live outside the courtroom with the latest. Kate.
Hey, Sarah, good morning. So Sam Bankman-Fried, he is back on the stand inside the courthouse behind me. More direct questioning expected from his attorneys today. Then we're going to get the government side. They're expected to start cross-examination as soon as this afternoon. So far, his lawyers have tried to portray this image of a startup that just grew too quickly while arguing that the founder was acting in good faith and didn't have criminal intent. SBF, as he's also known, testified about mistakes over at FTX, acknowledging that, quote, a lot of people got hurt in the collapse of that crypto exchange. Bankman-Fried also saying that his biggest mistake was not controlling risk. But SBF claimed that he didn't commit fraud or have criminal intent. That's key for them to prove here. Tried to shift the blame to some other executives, saying that he was too busy to keep tabs on his hedge fund that he also owned, too busy to get a haircut even, also didn't have the time or energy for a relationship with Caroline Ellison. That's his former girlfriend and the CEO of that hedge fund I mentioned, who's also testified against him. He said that he saw no reason why he couldn't use funds from his hedge fund to pay for things like celebrity endorsements, real estate, venture investments. Either prosecutors say those funds actually came from FTX customers, but a lot more to come today. Back to you guys.
Big day, Kate. Thank you. Talk soon, Kate Rooney. As the market is off the opening highs, Dow's still up almost 260. Let's get more on what's moving this morning with Dominic Chu. Hey, Dom.
All right, so Carl, most sectors in positive territory right now. Communication services is leading the way from a sector perspective. But healthcare is the relative laggard so far in early action. Among some of the decliners there, you've got Align Technologies. The Invisalign maker is off by more than 30% in just the past week as investors continue digesting weak guidance and prior quarter results. And among the S&P's biggest decliners so far today is Revvity, which was spun out of Perkin-Elmer earlier this year. The life sciences and diagnostic equipment maker cut its full-year forecast and missed estimates for its prior quarter. Now, on the earnings call, executives noted increased challenges from the company's pharma and biotech customers due to the ongoing macroeconomic pressures out there. So Revvity shares off 18%. Sarah, I'll send things back downtown to you.
All right, Dom, thank you. All eyes on the Treasury refunding this week. That's certainly one of the big catalysts. Our next guest is also watching incoming economic data, saying it will likely be softish, which should help break the negative doom loop in stocks. That sounds like Funds Track Global.
Generally, yeah. If I I'll take the trade if I see the overall direction. So right now the Dow Jones is still holding pretty well in comparison to NASDAQ, which is below even ES as well. So it's going to be interesting to see.
Is starting to bite, and I think we'll see it this week in the economic data. I think that's going to push sort of Fed to be patient, right? Because this jump in rates just in the past couple months is equal to 4 hikes. And that should get investors a little more constructive about how the Fed reacts to incoming data. So I think with positioning, the economy being okay but slowing, and if rates could stabilize or fall, and the Fed turning slightly more dovish, I think it is a formula for a rally.
But what about the leadership in this market? Last week, I mean, it wasn't like the big mega cap tech earnings were awful, but the reactions were.
That's right. I think the mood of investors has turned cautious, so they faded decent earnings. I don't think FANG's fundamentals are weaker. I mean, they're still at the center of this AI sort of secular story. So I think FANG actually leads into year end, and that also helps lift the S&P.
Is your view based on the idea that rates are going to start to come down, that it's not going to be higher for longer, and therefore perhaps that we aren't going to see a significant impact on earnings as a result of these higher rates over time?
Yes, to an extent. There was a great
report by Goldman Sachs economists about what fair value is for the 10-year. They used 3 models, and they came up with like roughly 3.8%. So the 10-year at 5 is reflecting this uncertainty about inflation, how high the Fed has to be. If the data softens, we're going to start to see investors say, look, the Fed reaction function is if we got unemployment picking up and inflation weakening, they're going to cut. So I think we're seeing the peakish points in the rates right now.
Doesn't the market eventually transition to bad news being bad news?
Yeah, I mean, that's a bad quadrant to be in. You know, if we're
Okay,
slowing,
alright,
but
we
it seems as
catching
we're
these
soft landing,
bids.
that's
Come
bad
on.
news is good news. But if it's a slowdown in economic activity because we just ran out of
Okay,
gasoline,
come on.
that's actually bad news is bad news.
Come on down. I
I
need
think
you
right now it's
over
going into interpretation, but to us it still feels
32,800.
like we're tracking for a soft landing.
The other interesting thing, the Goldman desk takes a look today at some of the dislocations we've had within earnings. Morgan Stanley, Google, Verizon, like top 5, biggest underperformances on a T1 basis, T+1 in several years. What do you think that's about?
I don't think it's inflated earnings expectations. I just think the mood of this market's gotten really cautious because of all the geopolitical tensions. I mean, I noticed this over the weekend. Almost every conversation with a friend or family or even a client talks about what's going on in the Middle East. I don't know if someone wants to be adding risk, even if they think the earnings were decent. So I think the mood is cautious. But of course, as you know, when positioning gets too bearish, that's when bad news becomes good news.
I wanted to dig into that for a moment on the geopolitical risk, because you would have thought it might have been more of a bullish factor for bonds if people are feeling so negatively about risk, and the equity impact isn't clear to me, because war can be also very bullish and stimulative to certain industries in particular. So how do you think about all that?
Well, I think that's been a source of confusion, because I spoke to a couple of fixed income clients over the weekend, and they were saying that the bond market is acting like the war is a limited war. That's why you're not seeing a flight to bonds. But the stock market, I think, it's not trying to discount the defense spending issue. I think it's trying to discount, is this leading to a conflict that could become, much larger? And, in that case, people are just changing risk premia. And that's why I think stocks are being hit while bonds haven't been hit. So you're right. If it turns out that the war is a regional conflict, this is actually bullish for equities because stocks converge with bonds.
Yes, it is. Definitely the patience.
Appreciate your updated views. Tom Lee from FundStrat.
Still ahead this morning, decent results out of McDonald's today, giving shares a nice boost, although off of the opening high. Still a big underperformer on the year, of course. We'll talk about what one of the street's top restaurant analysts thinks about the stock from here. Speaking of consumer names, Target's Brian Cornell at CNBC's Evolve Summit on Thursday. There's still time to register. You can scan the QR code on your screen, or you just go to cnbc.com/events for more on that. Back after a break.
Oh my goodness. 15 minutes left, ladies and gentlemen. Ooh, what just happened there? Oh, okay, how are you? Ooh, you dirty little. Ooh, what? Okay. Get it. Go, 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 go. Oof. Just before the end, just before the London close. Thank you, baby girl. Yes. Go on with your bad self. Go on with your bad self. Come on, keep it going. Just give me 800, man. Give me 800 and I'll go about my business. I'll be done. Come on, baby. Come on. Don't play with me. Don't play with me. Oh, Such a beautiful ad at the 32,750 area. Come on, girl. Get it. Come on, don't play with me. Don't play with me. Come on. Stop playing with me. Stop playing with me. Come on. Feeling like Chris Rockovic. Come on, girl. Get up. Like I know punk. Right? Quick pop, bro. Oof. Come on. Keep it going. Keep it going. Got shit to do. Too fast. That's all right. Hey, listen, man. Something is better than nothing, man. So as long as you're up on the day, just, you know what I mean? Whether you get out early, a little bit late, it's all good. And besides, again, it's just Monday. We still got a whole evening, early morning session all the way to Friday. Like, we good. Oh, wow. I wasn't even paying attention to this. Come on, baby. They testing us. So why y'all gonna play with me like this? Come on.
Welcome back to Squawk on the Street. McDonald's with a beat on the top and the bottom line. Some strategic price hikes did fuel sales in the United States. Our next guest says his most important stock call.
Facts. There you go, man. Once you exit, you gotta be happy with it, because if you stop going like, oh, I could have held, I could have caught this, I could have caught that, you end up having FOMO, which then you chase the trade, and then you're no longer being logical about it. It's like, yo, we got plenty of days to go. Up on my funded account, 15. Okay, Queen, that's what I'm talking about. Yeah, girl.
There was a lot of good in high teens EPS growth. Obviously, that's much stronger than the street expected, about 6 percentage points stronger growth. Ops were 9%.
Yes.
The multi-year trends for the regions were strong, particularly the U.S. and the developing markets, the international operating.
Yeah, buddy. Let's go. This is what I'm talking about. This is what I like to hear. I like these. Oh, why y'all being thoughts? Why y'all being some thotties? Come on.
The company's clearly talking about doing more value, but the competitive position of this company is extremely strong right now, and that came through on the earnings call. Right. It does sound like you think in order to meet the Q4 comp estimate, you really got to nail it in the next, eight weeks or so, right? Yep, well, in the U.S., for sure, the streets feels a little high there.
They're going to go ahead and work out. Now, alright, that's what's up. I'm going at 12, so I'm gonna go in like an hour, 10 minutes. I'm gonna go ahead and so thank you. You're welcome. Thank you, bro. I appreciate that. Yeah, I'll catch you guys. I'll catch you tomorrow. No, I'm not streaming until 12. I'm gonna jump off in 10 minutes. I'm going to the gym at 12, so I gotta go get my workout in because I'm feeling really good. Even though my arms are like super sore, like I'm literally out here like T-Rex. Well, kind of. So all of this is sore. So I gotta go and smash some legs. You know, start off the week right, legs, and then I have a like a 45-minute cardio hit session. Oh, that's gonna be brutal, man. I might not be able to walk tomorrow.
Yeah, GLP-1s, at most this could be 0.5% to traffic, and out there in the industry, other food companies that have had to answer to this far more than McDonald's have said it's virtually nothing right now. And right now, when you think about 5 million people on these drugs that are experts here, believe it could get to 15 million. So talking about tripling something that's modest right now in impact. So there's bigger fish to fry right now. There's the economic factors that are.
Come on, get over 800.
That's going to mean less pricing. These franchise businesses.
You're right there, baby. You're right there. Just be nice for daddy. Be nice for daddy.
David, I'm trying to figure out how old you are because I'm trying to figure out when the last time McDonald's initiated sometime in maybe the early 2000s. We'll just leave it there. But on the price, you have a significantly higher price target. What gets us there? Is it a weaker economic environment? What entices investors at this type of valuation where the stock is still trading near its highs?
They should be in a great spot to gain share, to keep on doing something like
Ooh,
4%.
ooh, 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 yes, yes, baby, yes. Let's go, let's go. Ooh, how are ya? Good morning. Go, 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 go. Come on, we're over 800. We're over 800. Can I get 820? I'm trying not to be greedy, guys. I'm trying not to be greedy here. But let's go. Come on, baby. Come on. You're right there. Be nice. Be nice. For me. Come on. Oh, you little third. See you tomorrow. All right. See you tomorrow. All right. You guys enjoy the rest of the day. I'll catch you guys tomorrow. Be easy. Yeah, I got like 8 minutes left, so I'll just wait till 11 and then dip off. Come on, baby. Come on. You're right there. Go for me. Go for me. Go, go, go. Let's go. Come on. Do your thing, baby. Do your thing. Keep it going. Come on, you're right there. Mm-hmm. Mm-hmm. 5 minutes to go.
Order filled.
Okay, filled. Come on. Okie doke.
The Biden administration unveiling the U.S. government's first ever AI executive order. Raymond Jabbers has more on what that means. Morning again, Eamon.
Good morning, Carl. It
is a pretty big deal. This is an extraordinarily wide-ranging executive order directing just about every federal agency to regulate the growth of AI, to protect the public, the economy, also national security in here. Among the safety measures listed, Biden will require some developers to share their safety test results with the U.S. government. The National Institutes of Standards and Technology will set what they're calling rigorous standards for extensive red team testing to ensure safety before public release of these AI products. And agencies that do biotech projects will be required to develop strong new standards for biological synthesis screening. Over the Department of Commerce, they're going to develop guidance for content authentication and watermarking so they can clearly label any content that's generated by AI. And the administration says it will also use AI tools to find and fix vulnerabilities in critical software. The order is going to provide guidance to landlords, federal benefits programs, and federal contractors so that they can keep AI algorithms from being used to worsen discrimination, which is one of the unintended consequences they're concerned about here. And in a nod to concerns that AI could be on the brink of eliminating millions of jobs, Biden is directing his administration to write a report on AI's potential labor market impacts and to study and identify options for strengthening federal support for workers who are facing labor disruptions that result from AI. Guys, back over to you.
Thank you. Keep us posted. Eamon Javers with another AI executive order. Quick programming note here before we go. We've got an exclusive interview tomorrow with the executive chairman of Shein, Donald Tang, and the new vice chairman, Marcelo Claret, formerly of SoftBank, and Sprint, of course, the first interview they've sat down on TV since he took on that second in command role. David, a lot to talk about, of course.
Such as?
Well, the company is growing very quickly, and they're taking a lot of share, especially in the U.S., but they face all sorts of criticisms that most of the factory production is in China, even if they say that they're not necessarily a Chinese company. They're making deals, too. They just signed a big licensing deal with Forever 21. They're buying licensing from a British company. So they're continuing to expand globally.
Got it. All right, we've got the broader markets up, but giving up some of the gains that they've seen so far in trading. Got a lot more for you on Squawk on the Street straight ahead.
All right, ladies and gentlemen, that is it for me. I'll see you guys tomorrow. Enjoy the rest of the day. Be safe and do not overtrade. Peace.